Going live on as well. So PAC Partners, CBA, kick off this conference. It's the fourth one we've done with the CBA. We're very happy that they're sponsoring, and they've got quite a relationship team here that we're trying to get in the door. That happens very shortly. And we've got it in 3 sessions today. This first session is, I think, the most exciting session, where you've got ag tech companies, gatekeepers, and we're very pleased to have it led by Emma Coath from Rocket Seeder and many other hats. And been through these conferences many times, Emma, and is incredibly well qualified to lead this facilitation with some great speakers. Thanks, Emma.
Just put these down here. Maybe if I can get you guys to come over here, if that's not too, you know. So you're all sorry. All right. So as Paul said, my name is Emma Coath. And yes, I wear a few hats, and one of them is now Chair Executive for Rocket Seeder, which is supports startups and helps in the AgFood sector, and helps researchers with understanding the commercialisation process. So sort of really at that early stage. Another hat I wear is I chair something called the Impact Club, which is some of you may know it's a network of high net worth individuals and families and family offices across Australia that invest in impact and create investable opportunities too, which I think is really important. Something else that I'm doing at the moment is if anyone is interested in science and STEM, I've just taken over the reins of the Royal Society of Victoria, which is up at 8 Latrobe Street, Melbourne. So a big rug there. It's only $120 to be a member, so it's a really important building in the history of Victoria and Australia science perspective. So that's enough about me. Today we have three businesses or representatives of businesses, 2 founders, 2 co-founders, and one executive director. So I guess I'll sort of let them introduce themselves, but I'll just do a brief intro here and just point out too that the 2 startups or scale-ups, the ag tech businesses, are actually portfolio companies with the AgFood Fund. So just a bit of a note there. So first of all, just here, this young lady, Katy Landt from Safe Ag Systems, so co-founder of Safe Ag Systems based in Adelaide. So an ag tech business that AgFood Fund recently invested in. And then we have over on the end there, we have Anthony Willmott, who's been around for a while. You've probably seen him, given that most of you are in the agriculture sector here, or if not all. So from Digital Agricultural Services, or DAS, as most people know the business. And then in the middle here we have Steve Dadd from Pentarch, so the Executive Director of Pentarch. So I think what we'll just do is go straight into it, and we've got a good hour here. So what we're going to do is allow some time to sort of get to know the individuals and the businesses, and then we'll go into sort of discussion and some Q&A after that. So Katy, I think we'll start with you, and we've got a video to play. So I think we'll just kick off with that, and then there's a slide, and then you can talk to the slide, and we'll talk about that. You? Oh, right, okay. I didn't know where the controller was.
Great.
What? Money.
It's very easy, the whole system approach where I can just go on my app at any time and go, yep, that's all ticked off.
Before Safe Ag, it was the minimum standard, but this has really helped us to increase it.
Safe Ag Systems sort of was at the top of the list when I went searching, and when I looked into it, it had everything that I was looking for.
It was about trying to locate all the important documents in one area. Safe Ag Systems well and truly covers everything for us.
Help us put a lot of things that we already do into one place.
It's provided a platform where all the information is centralised and everything is there.
Safe Ag Systems has just sort of brought everything up to, current standards.
The more you use it, the better it's going to be and easier.
3 apps can run the farm and Safe Ag's one of them.
The amount of administration we have to have as a larger system can be a lot smaller and more manageable.
It's all encompassing, it's all there. There's not 2 or 3 different apps to use and to get all the information, it's all there.
Just to have it all in one spot, we can all go to that one place and manage so much. It's ease of use, it's a whole package.
You can just update it all on the computer and it automatically is there for everyone else to access.
On your phone, you can use it on a tablet, and then that all feeds through into a dashboard, which is very user-friendly.
The Safe Ag Systems provided an opportunity for us to go to one platform and help us evolve.
We've been able to digitise everything all into one digital platform, which is just a godsend.
Awesome. I think just from the name, it's a bit self-explanatory what you do, but I guess I'll allow you to explain it in a little bit more detail. And here we can see that you've got customers who love your product. You've got 1,000 plus by now, or 10,000 plus users. That's huge. So, Katy, probably taking a couple of steps back. Could you just talk about how Safe Ag Systems came about and a little bit of a backstory for you as well as a co-founder?
I do. Thank you so much, Emma. Morning, everybody. Thanks for having me. It was a little bit... Oh, did I? Work. Can you hear me now? Yeah, thank you for having us. So Safe Ag Systems is a scale-up software as a service platform fit for agriculture. We've been around since 2016, founded by myself and my mum, actually. We are a spin-out of a training organisation that knew that the guys on the ground needed a tool to help run their agricultural businesses. Make a real point, it's probably not quite self-explanatory with that video, but started in the safety space, but we are a platform to manage your everyday operational side of your business. So not what you grow, how you run your business and manage your people. We've been evolving for many years and are starting to get some really great traction across Australia and a footprint in New Zealand, the UK and North America. So it was nice to have that validation that this kind of tool was useful and is very valid for businesses to sort of take that next level into professionalism. They've always been supported with ag tech on the premise of what they're growing, but that back of house has already been sort of filled in the space outside of agriculture with many tools, ERPs, but agriculture tends to have a lot of nuances that need a unique set of features and functionality to meet their needs. So we're filling that gap. From my background, originally off the farm, Yorke Peninsula, South Australia. I was second born and female, so no prospects there, but ran and managed to see a lot of the world and get a really good foundation in marketing and product design. Came back to my very entrepreneurial mother who posed a question on whether we could build a tool. I took the challenge and here we are sort of 9 years on. Yeah, getting a lot of great feedback from a lot of amazing clients across Australia.
That's fantastic. That's a great story and it sounds like you're just getting started after 9 years.
Yes.
So, I guess some people probably maybe have seen you for the first time, Safe Ag Systems, or starting to see you around, probably thinking you're a startup, but you're a little bit more than a startup. So
it definitely feels like we've been on the journey a while.
Yeah, that's good. So how does your product, your offer compare to other similar sort of offers in the market?
Yeah, absolutely. So I mentioned that agriculture sort of requires some outside of the box solutions. So we're dealing with a remote workforce. We're dealing with a usually low literacy demographic when it comes to workers on the ground. Love them to death, but multilingual and a learning kind of business management as well, usually sort of moving from family-owned farm to professional business, or it may have been purchased by a large corporate. We were having chats yesterday about the idea of what a corporate enterprise looks like in agriculture. It's usually a combination or a grouping of small SMEs. So something that's really fit for purpose for them. And I could go into the tools that we're using.
Well, yeah, I'm just interested how it integrates with other. One of your customers said they use 3 apps. It's one of 3 apps. So how does it integrate with other, I guess, apps and tools and digital tools for farmers?
Yeah. So I've mentioned here I like to talk about there's been an explosion of ag tech, of small solutions that anyone can sort of pull out of the app store and download and get some value on farm. But when it comes to keeping it simple, the traditional or the typical agri-tech stack usually is complete with a financial piece of software, a production piece of software, which is usually what you grow and very specific to the commodity in which you operate in. Very complex, that piece of software. And then there's this kind of empty space where we fit in the operational side. So we're very early on in the terms of integration. So what we're hearing from our clients is the ability to extract a lot of data to meet compliance needs and audits. And then possibly some crossover with chemical use, and then the people management side of things. So, yeah.
All right. Thanks for that, Katy. We might move on now to Anthony and keep the digital, the ag tech theme going for a little while. So I guess, in the what we're talking about here is, improving the efficiency of the sort of agriculture sector, if you like, using technology. And also removing risk as well for clients. So, Anthony, if you can sort of talk a little bit about what your business is and how it came to be, how long it's been around.
Before I do that, can I ask that? I want to ask a question to the folks in the room.
Yeah.
So everyone has to participate. So, what's the #1 driver of insurance claims? What makes people say, I'm going to fill in this insurance claim form on an agricultural property?
Theft.
What was that?
Theft.
Theft.
Weather damage.
Weather damage. Risk in general. And that's too broad, doesn't count. Any other thoughts? Fine. All true. The #1 driver of what makes a farmer claim on their insurance policy is commodity prices. And that kind of makes sense. So when farmers are making a lot of money, they look around, things get broken, they just can't be bothered. When commodity prices are down, they look around and say, I need more income. How can I support it? So I can tell you what's the #1 driver of pig production as well, if you want to ask that after coffee. It's not what you think. So Dad's whole focus is how do we bring together the insight and data that banks, insurers, commodity traders need to make better decisions. So we address the problem in rural insurance, which is the underinsurance gap. 35% of insurance policies in Australia have an underinsurance gap, i.e. they don't fully capture the assets on the property. That's a big problem for the insurer. Frankly, it's a big problem for the customer as well. It's the same in agricultural lending. The loan-to-value ratios are disconnected from the income that a property produces. So the work that we often do is really understanding some really boring stuff. Where is the property? What's its productivity? What's its resilience? What's its consistency, which are frankly measures of how good the farmers are. So we have the most complete data set on every rural property in Australia, what they grew last year, what they grew on by paddocks, what's their productivity, what's their carrying capacity, and that's used to solve really specific business problems. So we do that for winter and summer crop, we do that for grazing, but the question we solve for our banking clients is, kind of sounds boring, where is my customer? What are the assets on the property? What's the productivity? What's the resilience? What's it valued at? What's the income they could potentially produce? And it's early days, but that's to try and predict income so we can do better lending. What do we do for banking clients? For insurance clients, it's addressing the underinsurance gap, which is, for one of our clients, it's a $120 million opportunity. That's not selling to new customers. That's just getting the existing customers and getting them to be properly insured. So that's the problems we try to think. How do we use data and insight to solve a practical business problem, frankly, that people will pay for? We don't sell to farmers. That is great. We just think it's really hard. We just don't do it. We sell to the big end of town and present in a way that's useful. So we're 7 years into this journey. Our investors include Nutrien, AgFood Fund, IAG, CSIRO, so people who frankly want to know what's going on the ground. We work across those groups. We're doubling down on insurance and banking because that's what we're really good at. But we're the second biggest ag tech in Australia. Hard to work out, but we are the biggest crop forecaster in the country. So if you look at an ABARES forecast, does anyone look at the ABARES forecast? What's going on? 1, 2, anyone else? 3? Totally wrong. We're 3 months earlier. So you should be relying on us, frankly. So Nutrien, Cargill, Viterra, Louis Dreyfus all use our estimates. ABS now use our estimates as well. So how do you have consistent data to make better decisions? That's really what problems we solve. We're 25 people. We're based here. We've been executing against this for 7 years. That's what we do.
Excellent. And Anthony, you were sharing with me yesterday that you've got some exciting plans for next year.
We're doubling down on insurance because frankly it's a globally scalable problem. Under insurance gap, we're partnering with a group called Guidewire who are taking us global, which is great. But the problems there, they are the SAP of insurance, whatever you want to call it. But that's the work we're doing to enter other markets. But our strategy is to be the default standard for agri-data. And that's what we're executing against. We're within sight of that goal. We've just got to keep executing against it.
And Anthony, what's your secret sauce, I guess? Where does the data, could you, provide some more detail about how the business works, where the data comes from, why you're so amazing, basically?
I get told when I go to the US, I've got to pretend to be more amazing than we are. And here in Australia, it doesn't resonate. People Australians think you're full of bullshit when you act like that, and Americans think you're too humble. So we read really 4 to 5 data sets from reality. Either our own data, we've got one of the world's leading. The CSIRO says we're the world's leading, but I don't really want to write that down. We have our own AI team that really brings together that data on rural properties. So we generate our own data. We buy data. We've got 15 years of sales data for every property, every rural property in the country, all the building boundaries, all of that stuff. We bring that together. We bring in our customers' data. One of our banking clients values every property in their portfolio using us. They can turn around a rural valuation in under 4 hours. They value properties worth between $2 and $120 million, so a real range. So our customers have their own data in there, and then we bring public domain data. The amazing thing about this country is that there's good data available that you can access. There's plenty of people here who told me over coffee that they go to free websites. We bring in some of that. The challenge sometimes is great. Frankly, it's disconnected from your workflow and your operational boundaries, how you do or make decisions. So we consolidate that. I would say our magic sauce is we understand the business problem, we present the information in a way that people are prepared to pay a bucket of money for.
I'm sure Paul's sitting there pretty happy then and excited about the future. Thanks for that, Anthony. Steve, we'll move on to you and I'll see if I can pull up this slide. Need to press a button and I don't want to fiddle too much. A little bit of an overview of Pentarch, which is the Pentarch group, which is very useful. While we're doing that, logging back in, I guess, Steve, if you could talk about
sure.
the Pentarch group, because it's sort of changed a bit, it's changing, and also whilst doing that, could you talk a little bit about your backstory, how you got involved in it? That'd be great.
Okay, well, look, thanks, Emma. I'll waiting for the background slide to come up. Firstly, thanks very much for inviting us to participate in the AgFood conference this year. And can I say it's actually really nice to be in the category of emerging companies. In fact, our business is celebrating its 40th year this year, so makes us feel young to be in that category. But in truth, you know, a big part of our future and our growth agenda is really fostering quite a number of small startup businesses. So I really would like to reach out to the collective wisdom in this room for a lot of tips on how to do that. Ag tech, ag services, innovative insurance platforms, etc., are all relevant to us as we try and build this sort of and curate this little group of startups that we have going. I'll come back to that.
Yeah,
later.
yeah. Start from the start.
Right. So, first of all, just to introduce myself, I'm a chemical engineer by training. I'm now a director of the Pentarch Group. I started out my career in the sugar industry for 10 years and studied overseas, and then worked in strategy consulting with the Boston Consulting Group for a decade or so. Then 20 years with Boral in building products and timber, and now I'm a director of the Pentarch Group. Along the way, and more recently, I've become the chair of the Australian Forest Products Association, and I'm also a director of the Rural Development Corporation, the RDC Timber, which means that I spend a lot of time in advocacy and R&D, which are pretty relevant to the space we're in. The Pentarch Group, as this little slide shows, is reasonably diverse these days. We're a private company. We have about, based in Melbourne, we have about 700 employees, and we have three main operating divisions. We run a forestry division, which controls more than 2 million tonnes of wood fibre flowing through our hardwood, our softwood, our wood chip exports, our log exports, and value-added businesses like pallet manufacturing. We make the blue pallets for CHEB, and also more recently a modular housing business that we're developing. We have an agricultural division which is focused around hay exporting, and we run production facilities managing over 180,000 tonnes a year of hay exports into very high-end Asian hay markets. And more recently, we've started a third division called Pentarch Permaculture and Carver, which is really an incubator of innovative new economy businesses, you know, broad-based, including bioenergy, aquaculture, fertiliser, carbon-based businesses, focusing on things like the circular economy and, you know, really that sort of transition away from sort of traditional models of business in ag and in manufacturing. So that's the Pentarch Group. The theme for today, do you want me to?
Yeah, keep going.
I'm just going to say the theme for today sustainable returns across the cycle is a good theme, fine theme. But the question really is, which cycles are we talking about? There's absolutely no question that Pentarch, marches to the tune of economic cycles, and we live and breathe house starts and commodity price cycles and supply and demand dynamics for our export businesses around the world. But we also focus heavily on other cycles. So, for example, the climatic cycles relevant to us, and so too other political cycles. And sometimes those cycles are actually more impactful on our success than the economic cycles. In common with the ag sector, of course, climate plays a huge part: floods, fires, droughts, etc. But I think particularly in forestry, those cycles can have a long-term impact and can also affect the demand side as well as the supply side. For example, the fires in 1920 knocked out, burnt to the ground 15% of Australia's softwood plantation. Didn't affect us directly, but that's punched a huge hole in the next 40 years' supply to that entire industry. And more recently, the cyclone that washed through northern New South Wales and southeast Queensland obviously had an effect on supply. But right now and for some time ahead, there will be no house construction in that area. So the frames and trusses that use a lot of timber will not be delivered to site until those sites dry out. That could be weeks, if not months. So weather cycles are impactful on us. The other cycle, of course, that we deal a lot with these days is the political cycle. The policy cycle and the electoral cycle is very relevant to us. Forestry industry in particular, is a contentious space, but so too is energy policy, labour policies, carbon policies. All these things are washing through in that political cycle, which has a huge bearing on our business and our industry. So given that cyclicality and all of these overlapping cycles, is the real question of how do we manage that life, what we call in the rapids? How do we deal with all that? And Pentarch over the last few years has developed some really clever counter-cyclical investment thinking around that. And we manage those cycles in three main ways. Firstly is by diversity. Within a tight frame of our supply chains in ag and in forestry, we have created a diversity which allows us to be robust across those cycles. So, for example, if it's a drought in the Mallee, hay business in WA is typically doing well. If the housing cycle turns down and early cycle softwood going into house frames slows down, our hardwood business, typically being more architecturally oriented, has a 2-year pipeline of work ahead of it. We balance our imports and our exports so that if we're buying equipment from overseas, there's a natural hedge against our export of agricultural products, hay, wood chips, and lumber. We also geographically manage the risks, the political risks. So if the Victorian government, which they did, shut down native forestry at fairly short notice, we started a process of bringing wood fibre in from our Tasmanian business while we sorted through that situation to keep our customers busy. So that geographic diversity is a really key way of us managing all of those risks. Second way we manage risk is, particularly political risk, is actually being involved politically. And I don't mean donations. What I mean is a heavy investment in senior time in driving the political agenda as best we can. We spend a lot of time building relationships with the bureaucracy of government, state and federal. And we are also actively involved as an industry in direct advocacy. And we are on so many working groups helping government solve their problems and develop policy. So, being there, being present in that process it's a really important part of managing that political risk. Politics is hard though, very hard. And, they have a very short-term view often, which can be frustrating. But, you know, we're always in the game. I suppose we're probably a little bit like St Kilda, always in the game, but not often successful. But we do our best. Thank you. The third thing that we do to manage risk, of course, is we are constantly looking to evolve our business. So we have this incubator of small startup interesting opportunities, and in 5 years and certainly in 10 years, we will not be the same business that we are today. One of those businesses could be bioenergy, could be aquaculture, could be industrial fertilisers, could be something to do with the circular economy within our portfolio, could be an offshore services business. One of those will become $1 billion organisation, and we will be there to support that. And that will expose us to a whole lot of different and new cycles. So I guess that's the area where we need help. You know, we need those ag services. We need support to understand innovative models for insurance, which is becoming a bit of a market failure in the forestry industry.
Yeah.
And you know, and of course, finance and investment support to manage this growth agenda.
Yeah. And with that incubator, and I guess that sort of new division, if you like, it's separate but wholly owned. Is that right? But
yeah, we have we control that division.
Yeah.
In some cases, we have you know, innovative founders who retain equity, portion of equity, and typically what they're looking for is commercial acumen. And we found that, you know, the gene for creativity is not always overlapping with the gene for commercial acumen. And so the commercialisation that we can bring to some of these really, you know, entrepreneurial, innovative startups is very helpful to them. But there's different models.
Right. And how many staff do you have in that group?
Look, it's growing. We have 4 or 5 active investments in that space at the moment.
Okay.
And there would be fair scattering of senior time.
Yeah.
And probably collectively there would be, you know, 20 to 30 people working all of those businesses in different ways, both within our core business and in those individual startups.
Yeah. Okay. So with the startups, you take equity position in them. Is that in return for funding and also time, or
all of those things?
Just all of those things.
All of those things. Yeah.
Make them.
We're not a passive investor. We really want to be actively involved in those businesses.
Yeah.
And you know, work closely with those, you know, those principals, those entrepreneurs that give us energy and sometimes headaches, and hopefully rewards.
Right. And in terms of the future for the Pentarch Group, given that you're in the 40th year, you've got 2 major shareholders. In terms of ownership, what does that look like?
Well, we should probably ask one of them who's in the room. I noticed Mel's just stuck in. Look, they're as owners, I'm not going to speak on your behalf, Mel, but no real change in plans around ownership. They're young and energetic, and got a long time left in them. And you know, we're all on a journey as a board together to grow the business. And
great. Oh, that's really exciting. Thank you for that. So I might come back to you, Katy. We're talking about the Pentarch incubator and supporting startups. I guess, you know, from the, you know, overall theme of this event today, collectively as a sector and ensuring that it's more sustainable from an economic point of view, but also environmental, which is something that I'm keen to progress. But let's just start from the economic point of view and getting these startups off the ground. What's your journey been like in support and financial support, other than the AgFood Fund, of course?
Yeah. So, like Steve was alluding to, very early on in a business, there's a lot of ups and downs to get off the ground. We're very fragile at that stage, so we were very conscious of understanding how to build a product that had a low level of volatility across droughts and obviously the success of the farmer. So keeping it very commodity agnostic was our first step forward. So again, not what you grow, but how you run your business. So that kept our market quite open. Obviously, we've got a really strong cluster in South Australia to begin with due to where we were located, but push through COVID and really change up that purchasing behaviour of a farmer. I'm happy to take a Zoom call and understand a software solution online. Really sort of stepped it up again for us and gave us that stability. But yeah, again, growing our markets, making sure that the things like the cyclones are not going to affect us because we're in a little boat and we don't want to be tipped over. So that was our first step towards getting that stability.
And Anthony, yourself? A bit about your journey and the ups and downs and the support that you've received or not?
We were very lucky up front. We had investment from CSIRO and Nutrient. They were our first two investors. We had to focus specifically on solving problems they've got. We've taken investment from corporate VCs, so never managed to get a VC to invest because frankly they just don't like ag in Australia, is the reality. So we really focused on businesses who could see value in what we did, frankly brought more than money, for want of a better solution. And so that's really the work we've done to really think about what type of products we can build that we can scale globally. We always think about this, same with any company, there's two questions about us. Do we have a great product and is it a great market? And I love Australia, frankly, but it's not a great market. It's a small market. It's interesting, it's exciting, it's great. So we expanded to New Zealand, which was part of the next steps. And then we started to think about how we go to other markets outside of Australia. So the two questions, good product, which we've demonstrated, and then what's the right market to take full advantage of that. So that's kind of been the work been focused on over the last number of years.
We've got about 15 minutes, so I thought we might open it up to the audience for some questions. We've got the call on the roaming mic here.
We've got Joe May as well.
Oh, we've got one over there, yep.
I'll go this one. No, I can chip in here. We've all been to a number of conferences with emerging companies and gatekeeper type companies, and I'm interested in, I suppose, what maybe Katy has just been to Evoke Ag. What are we missing in those conferences, and what can we do here today to make it a bit better?
Can I do that? Oh. So just again, Paul, you'd like to know
what interaction do you want with investors and people here to lift the game? Because we seem to have echo chambers when we go and have venture capital. We're trying to do something a bit different here. It's a bit messy. It's not ideal, but Emma's doing a great job. We've got 3 great speakers.
Yeah. Okay. So sorry, I didn't answer the last part of that question about our funding journey. So bootstrapped today, so that's why it was very strong-minded to be very stable early on. A lot of grant funding, both federal and state. We obviously tick a big box when it comes to safety in agriculture. It's a pretty devastating industry with a ridiculous amount of deaths, 72, I believe, last year, doubled on the year before. So we're not doing our job properly. So I want to bring that to attention. But the grant funding was very helpful. But obviously, Anthony was saying you've got to build a great product to get the clients to pay for it. When we're going down the investment route and approaching Paul and AgFood Fund, you need to meet a certain amount of hurdles. There's a lot of conversation in agriculture about traditional VC models or investment metrics not fitting agriculture. I feel like that's probably a message I would love to get across. Maybe we can unpack what's happened previously with ag tech investment and maybe re-establish a baseline so we're not held to unachievable goals. And have a long-term view. This is a generational industry. This is not a quick turnaround. We're creating change that's going to span the lifetime of many people, many generations. So like what Pentarch is doing, like you're taking big steps to establish this company, I'm sure, for many generations to come, and needs big people to take big, brave steps.
Well said, Katy.
Just on Pentarch, there was a great question there about the funding. So does Pentarch feel as though it's been held back by being a private company? And do you think there are advantages with being public?
Well, look, we certainly discuss those sort of growth pathways, but you know, I think right now we see we're not really interested in keeping it private. Yeah, you know, the bureaucracy, the accountability, the workload of public company. I mean, I come from a corporate public company background, so I feel in the private space a nimbleness, a decision-making framework that's a lot better in many ways than it is in the public space, public company space. But having said that, we feel keenly the drumbeat of cash flow and things that are really very real to us, and they're a lot more remote in many corporates. So there's some upsides and downsides to that.
Some very learned people in the audience. I'm very surprised. They're all
interested in any views around funding. This is what Paul and I we talk about all the time. Like where are the bottlenecks and what's the issue in the agricultural innovation ecosystem in Australia? Why is it not working? Why are the RDCs, refusing to go down the VC route when potentially that's not the best thing for the ecosystem? Really keen to understand some view. I see some smiling faces there.
the data out there is pretty scary. I mean, we only do anecdotal stuff. It looks though 60–70% of the money going in at the bottom end is from government at the present time, and they might be crowding out some of the things that you're looking at, Steve, which is. But then there doesn't seem to be this group in the middle, and then this audience we're now going to talk about the listed interface, which has been sort of not taking IPOs the last 3 years generally. And ag is obviously one sector. So we've got, I suppose, two hurdles. We've got this growth private equity hurdle, and we've got this sort of public hurdle, which is restraining what we can do as a sector.
Well, I'm just going to say, I think from our angle, there's some serious barriers to investment in ag, particularly forestry. There's some real talk about market failures. We see activism working against this space in ag and in forestry. We see insurance issues. We see an inability to deal with those cycles we mentioned earlier. So there's a reticence to really lift our industry above where it is at the moment into what I think where it should be, which is an industry, broad industry of national importance. And I think when you start to get government and politicians talking about it in that way, it's the tone for an investment climate. The uncertainty of government policy is something that we struggle with as well. If you're investing for the long term, you need stable policy settings. We don't have that either. So I think there's a few barriers there that we need to work on, free up that investment.
I'm so impressed that Katy's got funding from the government, which I have completely failed at. So I have no good stories to share there. Probably the only question I'd just share is what we know is you've got to solve a big enough problem that fundamentally someone will pay for. We know with our clients have not even been tortured by APRA or they're losing $100 million. Then it's a pretty straightforward conversation to have. On the question of regulatory challenges, what we know is if you're a cropping property in Australia, you need to prove that you have not had deforestation on your property since 2007. I'll go get the dates wrong. And you need to prove that if you want to export to Europe. So regulatory approval. So this stick's coming, it's called Europe, and it's going to define how we operate and the investments that many people in this room will make. The question I pose though, how many hectares, or how many farms in WA fail that criteria?
1%.
One farm in WA fails that criteria. How many hectares across Australia fail that criteria? And it is like 1,500. And because we went and analysed all 45 million hectares to see which cropping properties chopped down trees, and it is next to none. Frankly, we chop them down well in advance, but putting that aside, here or there. So we do face a regulatory problem, but frankly, we've got the data. We are an incredible industry. We have unique differentiated capabilities. Frankly, farmers are coming off 4 years of buckets of money. It's been a bit tougher this year, but generally it's been making good profits. We look at the growth rate on land prices. It's been a pretty steady trajectory over the last 10 years. And you can see where we've got variability, but that's a pretty straightforward growth. So I think as an industry, we're well placed. We need to do a better job, frankly, share why people should invest in it. But frankly, that's why all the people in the room are here.
Tim Hart, I was just going to build on the regulatory stuff and not so much overseas, but that is what it is. And but in Australia, regulation is getting more and more difficult. I think what's coming to ASIC and the ASX is incredibly challenging for people who want to be publicly listed, particularly in the ag space where you do have the fluctuations in climate or whatever the case may be, or commodity prices. And I just think we really do need to look at that. I listened to Joe Longo yesterday. He said he doesn't think he's burdened us with too much regulation. I think that message hasn't clearly got through to his teams below him. So I think it is a real issue, particularly in this country. We need to do it. So I agree, with Anthony, obviously, if the EU regulates something, you've got to get on and find an efficient way of dealing with that. And some of it is rubbish, like whether it be that or modern slavery. If you're growing stuff in Australia, you're not practicing modern slavery. So you've got to go through a whole process. So I get all that, I think, but I think as a country, we need to look politically at removing unnecessarily burden of regulation on the ag sector. That's number one. The second one I want to make is I'm just really interested in Anthony. I had a chat before, but I just think also in a scale up or startup stage, I don't think we collaborate enough together across different companies or different people in the space. There's so many things we can collaborate on effectively, like getting regulation around, like actually developing the market, getting market approval, and then fight over the space. We tend to fight from day one for our part of that market. Someone told me many years ago, it's better having 1% of something worth $1 billion than having 100% of something worth $100. And I think we in Australia, and it's a cultural thing, are more in the latter than the former. So just my two comments.
Yeah, I think that's a really good point about the lack of collaboration. But yes, in the early stage of business and startups, that's just generally around regulation. We've got the climate regulation sort of coming here. We've got nature, biodiversity, regulation coming in the future, and we need to get rid. So it won't just be about the EU and getting access to the EU. It'll be a little bit more comprehensive than that. That's something I don't think we discuss enough as a sector. Why don't we do that? We're wonderful for Paul to put on this event now, but I was at a VOCAG. I've been to all 4 of the VOCAGs. Sorry if anyone's very involved in that, but I don't think I'll go again. It's the same conversation, and the conversations aren't real. There aren't many farmers there for a start. Yes, it's great in terms of the expo side of it and the sort of a lot of the ecosystem there, but really they're employees of RDCs and banks and all of that sort of. They're not sort of really sort of out there, doing stuff in the sector. They're the people that are taking on the risk themselves. So they're the people that should be there. And then really discussing that really important information that's here now, but also, coming in the future, and solve these problems together ahead of time and be more collaborative, as you said. Sorry, that's my rant. So I think we've got about Well, 5 minutes left. Is that right?
Andrew's got a question there.
I agree with your comment about, thank you, Evoke Ag. I was there representing an RDC, Summit Dairy Australia. Andrew Morn's my name, Somerset Capital. But my question is, for a venture-backed business, you really need to target international markets. And to do that, you also need capital. I'd be interested in sort of the observations of the panel on your sort of vision to go offshore. Probably, Anthony, I'm looking to you because you're probably the leader, the one who's most likely to do that. But how are you thinking about going offshore and the amount of capital you need to sort of achieve success offshore?
So the minimum's 10. And it ends up being 22 in the end, in my experience and discussions. The streets of US are paved with Australian companies who have gone there seeking to build a business and a future. And the reality is they've just spent that money and delivered very little. The reality in Australia is most ag tech companies are subscale. As we look to buy them and bring them into our portfolio, I keep finding they're all smaller than us, frankly, and that's ridiculous because we're 4 million of revenue today, and we should be 6 to 8. So you've got a whole ecosystem of players who are all fighting over scraps. To Tim's point regarding partnerships, and that's just not a sustainable way to build globally relevant businesses. Our strategy at the end of the US is fundamentally with business partners. We were there in the US this year. The question we're posing is the business problem we solved in Australia relevant in the US? And the answer was yes. But in Australia, I say that DAS does location intelligence for banks and insurers. In the US, they look at me like, they just don't care, frankly. It was the boring thing to say. In the US, I say DAS does farm and ranch underwriting for insurers who use the Guidewire platform. Which sounds so boring. But that business is 20 times the size of Australia. And it means I have one partner, I have 15 customers I need to sell. And that's the way Willmott. That in a nutshell is my whole corporate strategy, so don't share it too widely. But that's, when you think about entering the US, it's needing to be really explicit, solve a business problem that someone would pay for. And that's the real challenge as you start to think about how to do this. But the capital requires significant.
Yeah, we'll never turn that one.
Obviously different market that we're selling to, direct to farmers. So our approach, and probably from my marketing background, has been a digital approach to have like an always on campaign in the US. So not doing the flip up and spending a lot of money, but just being present. And we're getting bites. We get lots of bites, but we've been told our positioning is all wrong. The solution and the features and the functionality are fit for purpose for their business, but safety and compliance are not their drivers. It is managing back of house, back office, managing people, transient workforces, multilingual, all of that sort of stuff. So we need to probably put some money into changing that positioning and relaunching that campaign. And then it's an inbound strategy. They come via a 7-day trial and we nurture them and convert them that way. So it's a bit scary to say to an investor, can I have 10 million or 20 to lay some foundations in the US? I think there are other ways to do it. But maybe my only takeaway that was really great from Evoke was a think tank of ag tech farmers and industry sitting at a table working out what has worked in agriculture in terms of tech adoption. And the common denominator was a distribution network that was respected. The AgriWebs and the AgWorlds have traction because they have the agronomist. That's someone who comes to the farmer and says, I back this product. So what we're seeing in our market is the bookkeeper or the consultant, usually someone who's been affiliated with the farm from a financial or an employment capacity, is looking for a tool to make their life easier. And we need to tap into that network in the US as our first point rather than a full flip up.
Right, thanks, Katy. Any other questions? No, I think hopefully we'll have some interesting discussion over morning tea. Paul and I will be around to provoke you.
Yeah, I think it's fantastic for the panel and Emma to start off. It's, as I say, it's a difficult area to talk about. We're talking about lots of interfaces with these three presenters and Emma, and we're kicking off. And you can see we've been doing it for 23. We've actually been doing it for 25 years. And some other work we did around the Sydney Olympics, where we probably blew the budget when I was with Citigroup. But here we are doing it much more fit for purpose. And it is a 25-year journey to right-size the risk inside the agribusiness investing cycle. And I think this area here, the emerging company space, and what Pentarch's doing with their, I suppose, their clutch of emerging groups coming through, I think shines a window on what we could be doing. And hopefully next year when we do come back, there are success stories that Katy, Anthony and others can talk about, and hopefully Steve with your group. And that to me is just showing what can be done. We can always point the finger at government because, you know, they've got a difficult job, but if we can sort of show what is possible each year and come back, you know, I'll be here, and you know, PAC Partners has been a great supporter, as has Commonwealth Bank. And what we're doing in the next couple of sessions is we do bring the gatekeeper, the leaders in. So the elders, Nutrien, Ridley and GrainCorp, who have, you know, weathered the storms for up to 180 years. I think elders is so it's been a long journey, but they're still in some ways just getting started with what they can do with their platform. And I think that's going to be a great session, and look forward to the Q&A there. We'll have more investors along for that session. We've got to sort of grow these companies to a certain stage and maybe convince Pentarch to put up their hands and do an IPO to get the institutional investors along, but that might be a little way away. Thank you.
Thank you to Katy, Steve and Anthony for your time this morning and your contributions. And to our fourth panelist there on the end, Paul.
Doing well. I do safety.